My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube channel, the home of the 5-minute or less video. I like to make my videos informative and educational so you can make a decision that you need to make on any case. I try to put the IRS bent on it so you understand what IRS is thinking. The only marketing I do is this. I'm available for representation and affordable consultation, and we are the best. I've worked over 10,000 cases. I worked at IRS over a decade. I've been doing this for 4 decades, and yes, I have been doing this for 50 years. So my topic today is don't give IRS a reason to look at you for a tax audit. That is the reason. So what's the first question you're going to go ahead and ask? What reasons would IRS have to look at me? That is the number one question. Michael, when you speak in front of people, when you go to a convention, when you do a seminar, when you're on TV, Michael, why is IRS going to look at me? Actually, the truth is, IRS's computers look at you. IRS never looks at you. So let me just tell you how the process works, how the system works, and you can kind of make your own decisions from there. By the way, if you're ever going through a tax audit and it's a small audit, represent yourself. You don't need anybody. If you have all the documentation you need and it's a large dollar one and everything is pristine, go in yourself. But there's skeletons in your closet. Don't go in yourself. Why? IRS can expand the audit to 3 years, and that's something that you do not want to go in. Now, you need to have someone be able to stop the audit and go forward. So anyway, let me just get back to the last thing. That was a little promo, but let me tell you why you don't want IRS. Why they're going to look at you. I'm sorry. IRS has what's called a DIF score. It stands for a discriminatory index function scoring system that they use. Let me tell you what that's about. IRS looks at you because of this. IRS literally scans over every tax return, and it has a DIF score on that return to tell you what the possibility of an audit is. Now, I could see a DIF score. You would know a DIF score from really a constellation that's up there that you're looking up sideways. You're just not going to know. What a DIF score is this? IRS has algorithms in their computer that is linked to where you live, your adjusted gross income, your expenses, your dependents, and your credits. They have that information on their base algorithm for everywhere in the United States. So when you file your tax return, IRS knows what the national norms are for after you log in your income from every expense, every deduction, every credit. IRS has an algorithm to go ahead, or filters to know whether you are within the national norm. But you don't have to be within the national norm of everything. You just don't. Sometimes people have 2 houses, not one, and their interest on their home goes really, really high. That's okay. But what IRS is doing is they're computing all the flags that may pop up. You may have no flags on your return. Some people may have 10 flags. But IRS starts scoring, and I'm just giving you flags so you have some sort of visual idea. If you have 10 areas on your return that pop up flags, that gives IRS an indicator, something may be wrong. But that doesn't mean they're going to audit your return. What IRS has to do is they give every flag a value as to how high you were over, and then they look at accumulation and they will assign a number to your tax return. Even with that, that doesn't mean your tax return is going to be audited, because IRS has to have the people to go ahead and look at the returns they think have audit potential. If they have 5,000 IRS agents, they may take the scores that are the highest 10% and let the other 90% go. It all depends on how many agents they have and how high your DIF score is. That's how IRS determines. Don't give them a reason to audit you. So if you're taking deductions and you take the normal deductions that most people should, you're not going to get flagged maybe in 1 or 2 areas. But when you start getting greedy, especially for self-employed people, that's when the flags go up, because those people really get out of the national norm really fast. So a W-2 wage earner, it's hard to be flagged unless you're taking abusive tax credits, and IRS keeps track of all those. They have filters to know what credit you should and shouldn't take. So if you're self-employed, make sure you stay within the norms or file a really accurate tax return. Does anyone know the norms? No. But when you work at IRS a long time, you really have a good idea which returns are going to be pulled and not. That's why if you have former IRS agents kind of prepare your returns, they could be CPAs, tax attorneys, whoever. They're going to have a tendency to know if your return is going to be audited, so you're audited or not. Thank you. If you think this information was helpful, give me a subscription, leave me a comment. But subscriptions are big. If you want me to do a YouTube on something like this, go ahead and leave me a comment and I'll probably do a YouTube. So remember, don't give IRS a reason to audit you. And if you do, try to make sure they only audit 1 year and not 3. Thank you.